In this video, I'm going to go through how to build an Australian ETF portfolio. So when building an equity portfolio, you really want to put all your ETFs in different buckets. They each kind of do different things. Now I'm just going to focus on the equity products today. I found 147 so far and thrown them in the algorithm, and this is how I'm going to show you how to build a portfolio today. So the hardest thing to figure out is your asset allocation. So how much do you put in each asset class? So when you put all the data from the Australian ETFs and all the historical data together, this is what I came up with. 14% of your money should be in emerging markets, 20% in international, 20% in global and US sector, 28% in American equities, and 18% in Australian. And at this point, all you have to do is pair it with an ETF. EMKT is the Van Eck emerging market product. IVE is the international product. We're really looking for EFI country. FANG is going to add some tech into your portfolio. MOAT is looking for American value companies. And VHY is the Vanguard Australian High Yield ETF. And then you can start adding to these portfolios if 5 funds is too boring. So I've made you a 7 and a 10 fund portfolio. The 7 fund portfolio starts to spread your money out in emerging markets between India and Asian technology ETFs. It also starts to spread out your global and US sector into industry ETFs using FANG and SEMI for semiconductors. And the 10 fund portfolio starts to split up your money internationally between Europe and Japan. It starts spreading out your American equities into small cap. And it starts spreading out your Australian equities into mid-cap. Now there are other ETFs that also made pretty good portfolios. In the emerging markets, CNU will invest in China. In the international funds, F100 will take care of the United Kingdom. ACDC looks at electric vehicles. CRYP if you like crypto. ESPO if you're a gamer. HACK if you like cybersecurity. IXI if you're a consumer staples investor. Or VBuild if you like global infrastructure. For the American products, you can use IJH for mid-cap, IVV for S&P 500, NDQ for the NASDAQ, and VTS for the total US stock market. For Australian ETFs, you can use A200 for the ASX 200, ILC for the ASX 20, MVW for an equal weight, VAP for Australian properties, VAS for the ASX 300, and VSO for small cap. Now we can only look back about 4 years because of SEMI. It's the youngest ETF. All these portfolios were basically neck and neck. Do you want to spend the extra time to diversify your portfolio? This is technically the easiest portfolio for the average investor to hold on to. It doesn't really jump around as much. The 5 fund portfolio has the lowest standard deviation and the lowest max drawdown. Now this is a very short time horizon, so you may want to try testing out other ETFs with longer time horizons to really build a portfolio that you can be confident and comfortable holding. When in doubt, take a look at that Sharpe ratio.